Welcome to S&C Critical Insights. I'm Marc Treviño, and together with my partner, Melissa Sawyer, we co-head Sullivan & Cromwell's corporate governance and activism practice. We're based in Sullivan & Cromwell's New York office.
We had an exciting development this week. We launched our annual Shareholder Activism report. It highlights what we believe are the most significant trends affecting the shareholder activism landscape in 2017. We analyzed a wide variety of data to come up with this report. Marc, maybe you could lead off by talking about what some of the most notable trends were.
Well, the thing that I always talk about when we're thinking about activism in the current environment is the concentration of equity ownership, both among the largest institutions and in particular among the large index fund providers. So when you look at the amount of voting that they control, at this point, any real activist contest focuses on them. And that drives all kinds of other trends. From my perspective, they're just all connected. You've seen an increasing focus on ESG and long-termism in activism as buzzwords. That, in part, is because it appeals to the voting mechanics of those holders. They're special because the people who make the voting decisions don't have any stake in the economic outcome of their decision. It's not as if there is a portfolio manager around who may have a different view. It's all focused on things that are unrelated to a core investment decision, and you're seeing that take hold. Interestingly, you're also seeing continued success of activist campaigns, notwithstanding criticism by some of these same investors of activism and short-termism. And I think as we'll talk more, I think in part that is the result of the relationship that activists now are beginning to have with institutional investors, particularly these institutional investors, as repeat players, because they are significant in every single activism interaction. That is the core of what I've seen in the past season.
And this concept of repeat players in the activist world was really important in 2017 in other ways. For example, we saw these frequent activists going after some of the largest companies, which in some respects is a new phenomenon. It used to be mid-cap companies or billion-dollar range companies that were most at risk for activism, but that's really nothing that you can count on now. If you're a large cap company, you have to be equally concerned. And for a while there, back in 2014, 2015, we saw a lot of new activist funds emerging. That was not the case in 2017. It was the tried and true activists who have developed reputations in this space, who seem to meet with the most success, both in terms of fundraising and in terms of garnering director seats at their target companies. We're also seeing these trends develop in Europe, I should add. Our study focused entirely on U.S. companies, but there certainly has been a lot of news in the last year about the evolution of activism in Europe, and some of the same things that we saw a couple of years ago in the U.S. are starting to bleed over across the border. On the M&A front, there's a lot happening in the activist space as well. For example, we're seeing activists both catalyzing deals and intervening and announce deals. So for large multinational corporations, we're seeing activists really putting pressure on them to divest underperforming business lines or brands that are not generating the same returns as they have historically. And that's creating a lot of M&A activity in terms of divestitures. At the same time, though, anybody who announces a public company M&A deal in this environment needs to be very worried about their ability to secure a shareholder approval for that transaction. And an environment where an activist can buy into the stock and try to block the vote in an effort to get a higher price out of the deal, that's a phenomenon that we've seen over and over again in the last couple of years.
So maybe we should, at this point, turn from 2017 really into 2018 and try to take what we've seen and the trends that we noted and talk about what a company can do to best prepare itself to deal with or avoid an activist campaign. And there's obviously no one size fits all, but I think there are some steps that companies can consider.
So it's a lot of the techniques that people use to defend against activism are tried and true, but the most important factor is preparation. It always has been, and it continues to be so, that preparing for an activist attack, having discussions with the management team, and in some cases even having an outsider come in and take a look at the company structure, company performance, company governance to assess whether there are areas of vulnerability is a way to identify whether you're going to become a target of an activist, and if you do, what your best defenses are. That being said, I think governance took on some heightened scrutiny in the last year in the activist space, largely because of all these ESG issues that you mentioned, Mark, and maybe you could say a few words about that.
Sure. Certainly governance is one that will continue to play out in the general shareholder space. But in that sub area, the thing that really has changed over the past 2 or 3 years is the interaction of companies with their shareholders and shareholder engagement. You hear about it all the time. And one of the takeaways that I have is that as a result of that, and it's new and it's successful, is that companies regularly overestimate the relationships that they have with some of these big shareholders. And so when they consider the possibility of a challenge, when they consider the next step, they consider the likelihood of success, and you're looking at this group of concentrated 3, 4, 5 shareholders, they're feeling very comfortable. In every instance, they've overestimated that when there's an actual challenge. So I think it really is important and helpful during times of peace, so to speak, to engage with them about the things that they care about, which obviously includes governance, in a deep way and not a superficial way, so that you, even though you're unable to fully balance that relationship, you have something there. And importantly, these people have their own goals, and it's important to understand what they are. So they have goals with respect to achieving diversity on boards, with respect to governance, to the extent you take steps that are consistent with what they would like you to do or what they're proposing. It's important to give them some credit, because that's the kind of goodwill that might last in case you are, in fact, looking an activist in the eye and need to reach them again.
Mark, a lot of companies that we talk to believe that they have good relationships with their investors. They feel like they have good investor engagement programs in place, good public disclosures, market standard governance practices, and they may feel like their stock is performing relatively well. Are they safe from activism?
So you're so right, and you started off this way, and there's just no question about it. No one is safe, and certainly no one is safe just because they have a good governance score and because they've engaged in a good shareholder outreach campaign. It's important to do. But I think if you look at some of the name brand, the extra large companies, those actually are usually associated with all the things you're talking about. It's not the case that a P&G can't get in front of any institutional investor that it wants. It's not the case they don't have teams who are working on governance, on ESG, and all of that. They have the resources, but it's not going to be enough. Not in this environment, not when doing a campaign, particularly a successful campaign against a name brand company, is something that then further enhances your own fund, right? You're the fund that did this. Your fund is in the news. That attracts investors. That makes you more powerful in your next campaign. Like, it's really appealing. It looks like we're running out of time a little bit, so probably makes sense for us to do some takeaways, and we can always do more in another podcast. I'm going to let you do the first one, Melissa.
Well, I think one important thing for companies to remember is that sometimes activists have ideas that resonate with other shareholders. And the old style of hostile takeover defense, which was kind of a scorched earth approach that rose up in the 1980s, may not work when you're dealing with somebody who is a shareholder. They have credibility with your large institutional shareholders. They have intellectual credibility with the markets more generally, and they have a public relations machine that is able to attract attention to their activist thesis. And so in that environment, a lot of companies are finding that a good outcome for an activism situation is to be able to deal with it in a quiet and reasonable way without undue distraction for their management team and their board, so that they can continue to focus on important things like long-term strategy. And for that reason, some of the sort of anti-takeover techniques that people used to talk about in relation to activism, like deploying poison pills, for example, may not actually be the right first step for every company. There's a time and a place for them, of course, but again, it goes back to the comment that we made earlier that there's no one-size-fits-all approach for every activist situation.
Another takeaway, really from our experience, is the importance of a unified board in addressing any activist challenge. If the board begins to fracture, if there's weakness in that, you really don't have a lot of hope. And so you also need to look towards the last step, which is what happens if you agree to put someone on the board that you wouldn't necessarily have nominated but for the challenge. And that's one of the biggest negatives that people consider when they consider a challenge, is the potential disruption, which is, I think, something that every board should be thinking about and looking at and have considered. And then ways to minimize that, if in fact you feel that you have to do that, whether it's the appropriate step, how to manage that relationship, how to make sure that your existing board structure will function if someone new comes on board, who either may have behind them a team of analysts who are going to be looking at every board presentation and preparing its own board presentation, or just generally may not engage in the same type of collegial conduct that one would expect from a board.
Well, thank you for listening. To learn more about our corporate governance and activism practice and to download our review and analysis of 2017 shareholder activism, please visit us on the web at www.sulcrom.com.